and welcome again to another edition of Market Analysis for today, May 13th of 2025. I'm Gio Betancourt, and this is a recording done by Vantage right about 45 minutes prior to the U.S. session open. Well, after a huge market rally on the back of the U.S.-China tariffs agreement, the praise is already on for the next catalyst. It is now up to President Trump to deliver on his deal-making reputation. The S&P 500 is now 3% above its level before the April 2nd Liberation Day tariff announcement. The Buy American trade is back, with the dollar strengthening and the U.S. technology companies leading the stock rise. Now, in terms of the stock market catalyst, there aren't too many likely candidates. Russia and Ukraine seem a long way off reaching a long-term settlement, despite possible peace talks in Istanbul on Thursday. Meanwhile, the U.S. and China tariff truce means the Federal Reserve can probably continue to hold off on interest rate cuts as it focuses on keeping inflation under control. That means there's pressure for more trade deals, starting with Trump's visit to the Middle East this week. If the market can't get the certainty of no tariffs, then it will demand a constant flow of positive trade news instead. Now, over to you, Mr. President. Now, Americans saw some relief on inflation last month. The trade war will likely push prices of everyday goods higher in the coming months. The consumer price index climbed 2.3% year over year in April, according to the data released today. Economists surveyed had expected annual price growth of 2.4% for the second consecutive month. Now, could we speculate to see another high leg for the indices, or will it be profit taking? With that note, let's take a look at what we can speculate from this run. Let's use the trend extension tool and use it to speculate or to identify levels of probable or levels of resistance. So initially we have hold on, let me just put this to the right hand side. Okay, stability, coordinates, style, here you go. Let me put it to the right side. Okay. So initially we have, let's just use our tools here, the 0.38% as a probable level. So that's 21,076. There. And then we're going to use the 50 percentage, which is right where the upper Bollinger Band is as a second probable level of resistance. So that's 2159. 2159. So there we have our levels of probable levels of resistance for today. And you can do this for the other assets as well. Now, as far as support goes, I'm just going to use psychological values like 20,800, and then right below that 100 points lower. So there we have our levels for today. For the NASDAQ, you can do the same for the other ones. Here, I'm just going to use the top and then use 5950, 5800 for the S&P, and then 5750. Or actually we used yesterday's swing low for the S&P. The Dow, let's take a look at the Dow. So actually the Dow is retracing somewhat. Let's use our retracement tool and see how much of yesterday's retracement can we expect. how much of a retracement of yesterday's move can we expect? So we do say that we want to use the Fibonacci values, so the 0.38%, 0.382% to be more exact. That's 42,228. The first level, and then let's use the golden ratio this time, which is at 0.618%. So that's 42,022. There we have our values for our levels of support. Resistance is going to tighten up our first level of resistance to the upper Bollinger Band, and then 42,800-ish. Okay, there we have it. So that's the levels for the Dow, crude oil. All right, so crude oil. So Trump is in Saudi Arabia, in the Middle East. He is wanting to. I'm just gonna use $63 is right there, so I'm gonna use 63.40-ish, and then that upper Bollinger, that 50-day moving average. As far as support goes, I'm going to use 61.5, and then the 20-day moving average are our first and second levels. So, all right, that's our levels for crude oil. Looking for a swing high, buying. Nat Gas is basically flattish. It has rebounded. I mean, it has violated our levels where we have from yesterday. I'm gonna keep them. I'm gonna use that swing high from yesterday as one level, and then yesterday's open for our second level of resistance. Gold. Can we speculate to see a recovery on gold today? I'm going to use that 20-day moving average as my first level, and then that swing high as my second level of resistance, the lower Bollinger Band, and the 50-day moving average as our second. All right, so looking to, we could probably speculate a nice little rebound on gold. Then we have silver that has just really done a strong move to the upside during the London session. So let's use a previous swing low. The 50-day moving average is acting as a nice level of support, and then that lower Bollinger Band. I'm gonna keep the same levels. So basically, well, actually, I'm gonna leave that swing high as my first level, and then the upper Bollinger Band as our second. So looking for a swing high or recovery. Copper, I'm gonna use a 20-day and leave that same swing high as levels of resistance. Perhaps looking for a higher move. Bitcoin also just within range, with yesterday's range. I'm going to use the upper Bollinger Band, and then 107 as a probable level. Then I'm going to use yesterday's swing low and see if we're going to see another rally to the upside on Bitcoin. The currencies, the euro seems to be finding some traction after just receiving a beating yesterday. We are basically looking to push higher, at least to trade above 111. See that to be the case for the euro for today. Now we have the British pound. I'm actually going to bring my resistance to the 20-day moving average, bring my other second level of resistance to the swing high from last week, bring up my support to that 50-day moving average, And I'm gonna use yesterday's swing low as a second. Dollar index receiving actually the open gap down, hasn't been closed. The upper bound of your band is acting as a level of support for now. We do have the 50 moving average across the chart. You know, that dynamic level of resistance. So I'm gonna use 105 as a power level of support. Actually, 101 is looking to retrace. That's it for today. Have a great trading day, and I'll see you tomorrow.